I love inflation. I love to pay $6 or more for gas per gallon and struggle to put food on the table for my family. Said nobody ever. Thank goodness I'm a dividend cash flow investor and I have the ability to not only counteract the effects of inflation, but actually beat them. Over the next few weeks, we're going to be talking about some quality dividend stocks currently available for a deep discount that give you the ability to go toe-to-toe with inflation and win. Today we're talking about a dividend stock that is probably not in your portfolio. If you're like me, your first thought when you look at this stock is, doesn't seem safe to me. Seems like maybe consumer discretionary and likely to struggle during tough times. But in my opinion, this company is actually a really great buy. I believe this in my heart of hearts so much that I recently opened up a new position in this stock. Let me introduce you to the newest addition of my portfolio, the Whirlpool Corporation. Ticker symbol WHR. Whirlpool Corporation is part of the consumer discretionary sector of the economy and has been paying consecutive and increasing dividends every single year now for 12 years. The very first thought when I saw Whirlpool Corporation pop up on my monthly dividend stock spreadsheet was, this is a company that makes products that people don't buy in a recession. And to be honest, I was completely wrong. By the way, now that we're talking about my monthly dividend stock spreadsheet, now is a great opportunity to join the Average Joe Investor Patreon community, which comes with complete access to the Average Joe Investor Discord channel. As part of the Patreon community, you get access to my monthly dividend stock spreadsheet, which has all of the different dividend stocks that have been paying dividends every single year for at least 5 consecutive years. Over 600 dividend stocks. You are the first people to know what moves I make in my own dividend portfolio and why I make them. Access to all of the dividend stock spreadsheets that I've used over all of my past videos. You get unfettered access to me for any questions or concerns that you have. And probably the most important, access to a community of dividend cash flow investors that have different areas of experience and have the ability to critique your own portfolio and give you ideas for the future. If you want to learn more about joining the Average Joe Investor community, check out the link in the description below. So let's understand a little bit more about what Whirlpool Corporation actually is. Many people think of Whirlpool Corporation as just one single company, but really it's a company with an umbrella of different name brands that you know, including KitchenAid and Maytag. And it also includes companies like Genair, Brastemp, Console, Hotpoint, Indesit, and many others. One of the things I really liked when I dug deeper on Whirlpool, I really liked their strong regional footprint, and really you can call it a global footprint. We've got 57% of net sales coming from North America, yes, 23% from Europe, Middle East, and Africa, 6% in Asia, and 14% in Latin America. $2 billion in 2021 adjusted free cash flow. You guys know I am all about cash flow. As stated on their own annual report, Whirlpool manufactures and markets a full line of major home appliances and related products. Their principal products are laundry appliances, including commercial laundry appliances, refrigerators, freezers, cooking appliances, and dishwashers. But they also include a robust portfolio here of small domestic appliances. And really, I think this gives you a lot of diversification. Products that are larger, such as refrigerators, freezers, cooking appliances, well, there's the fact that everybody needs these things at some point, but these smaller appliances are ones that really give them flexibility and diversification. Look at the balance in their net sales based on product categories. Very balanced year over year. A third of their sales come from laundry appliances, a third from refrigeration, nearly another third from cooking appliances, and then also dishwashing and other at 16%. Very consistent year over year. Let's talk more about the dividend metrics that make a quality dividend stock. The biggest one, the reason why we're talking about it with respect to inflation, is the dividend growth rate. If you own a dividend stock and the cash flow is not going up every year, we know that we're losing money and we're losing purchasing power because we know that inflation is real. Over the long term, it's been historically around 2 to 3%. However, right now it's at like 8 or 9% year over year. At a bare minimum, we want quality dividend stocks that raise their dividend at least as much, if not more, than the long-term inflation rate. But what I really like about Whirlpool Corporation is look at these dividend growth rates. Over the past 10 years, on average, they raised their dividend by 12.2%. Over the past 5 years on average, 9% growth. Over the past 3 years, 10.7% growth. And in the past year, they raised their dividend 23.5%. All of these figures here are beating both the long-term and the current inflation rate. Based on their price as of October 10th, $138.73 per share, their dividend yield was 5.05% annually, against a historical 5-year dividend yield average of 3.29%, which is effectively a 35% discount. Let's talk dividend safety here. When I talk about dividend safety, I am most concerned with the dividend payout ratio, which is traditionally calculated as dividends paid for the year divided by net income for the year. However, I'm a believer in free cash flow because dividends are not paid with net income. They're paid with actual cash. My preferred dividend payout ratio is dividends paid divided by free cash flow. And in my monthly dividend stock spreadsheet, we look at both over the past full year as well as the trailing 12 months. In both cases, we've got really great dividend payout ratios. In 2021, we had an 18% dividend payout ratio, which is unheard of. It's super safe. And despite the turbulence we've seen over the past trailing 12 months, we can see a dividend payout ratio that's still only 52%. That tells me this dividend is safe and has the ability to grow additionally in the future. You can see here on Morningstar's website a consistent track record of free cash flow per share from all the way back from 2012 all the way through 2021. Another reason I like Whirlpool Corporation is the fact that I have the ability with their option chain to sell covered calls on a weekly basis if I want to. By the way, for those of you out there that are going to take a closer look at Whirlpool Corporation, they do have an upcoming dividend payment. Right here, it's going to go ex-dividend on November 17th, 2022, with the dividend being paid out on December 15th in the amount of $1.75 per share. Remember that there are always risks with selling covered calls by limiting the amount of upside on the dividend stock and the fact that your dividend stock might be called away from you if it gets assigned. However, there are a ton of benefits as well. Oftentimes when selling covered calls, you have the ability to 2x and 3x your cash flow every year. Looking back at the spreadsheet, we see that the annual dividend right now is $7 per share. If we look at the December 2nd expiration, which is 28 days out, so effectively a 30-day expiration, we can go to the 20 delta way down here, priced at currently $129 a share. And remember, this is a down day too, so these numbers are going to be very conservative. The stock was down 1.83% today, but you could sell it. If it's $129.21 a share right now, you could go to a 24, 26 delta here, even more conservative, what to $139 and get compensated over $150, $160, maybe even $175 every single month to sell covered calls depending on what price you get and depending on when you sell during the month. Hypothetically, of course, in a perfect world, if we could sell a covered call for $175 at around a 20 to 24, 25 delta, $175 times 12, hypothetically of course, would get you cash flow of $2,100 every year. That's taking your cash flow from a total of $700 a year if you owned 100 shares to $2,800 a year. Whirlpool Corporation is a great inflation-beating stock because of its dividend growth rate. It's also on discount right now with a yield north of 5%. With the ability to sell weekly options, really safe dividend based on their dividend payout ratio based on free cash flow, it's hard to find something concerning about Whirlpool Corporation. It's in my own portfolio, I own it myself, though I don't quite have 100 shares yet. Hopefully you found some value out of this video. Make sure to leave your 2 cents down in the comments below. I do my best to respond to all comments I get on the first day I post a video. That's all I got for you guys in this video. Have a great rest of your day, and thanks for watching.